I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Connect. Digital assets saw some elevated levels of activity last week in the wake of news that US regulators had finally approved Bitcoin ETFs. The price reaction may have been rather more muted, however, with multiple false starts being seen in recent weeks, leaving the underlying Bitcoin price to finish on Friday night near year-to-date lows. 1 week vol on Bitcoin/USD printed 68.72% against 46.95% for 3 months. Natural gas prices remain a standout for the commodities sector, with downside pressures early in the week proving to be unsustainable. The draw in EIA inventories on Thursday was the catalyst which halted the sell-off, and prices are now within reach of a retest of the highs seen at the start of 2023. Further escalation of the situation in the Red Sea has the potential to maintain support here. 1 week vol on Nat Gas came in at 97.5% against 58.04% for 3 months. More strong gains for Japan's Nikkei 225 index of blue-chip equities resulted in some moderately higher levels of price action. The underlying has again been testing fresh highs not seen in over 3 decades, as the prospect of quick rate cuts from the US deteriorates, keeping the yen under pressure too. 1 week vol on the Nikkei stood at 17.42%, up from 16.2% for 3 months. And European banks have been in for an active week, with CMC's proprietary basket covering the sector finding itself in focus. There's concern that the ECB is now pushing back on the idea of rate cuts, despite an ongoing pattern of weakening economic data emerging. The basket had started the week by pushing above the highs posted in early December, but this proved short-lived. The longer rates stay high with a slowing economic backdrop, the greater the lending default risk will be for the sector. 1 week vol printed 28.39% against 23.31% for 3 months.